Now, in yesterday's video, I highlighted how the CPI report coming out today was most likely going to come out positive. And long behold, we saw that inflation came in less than expected. Now, one of the reasons why I mentioned that it was most likely that we were going to see inflation cool off in a report that came out today was because I said that, hey, supply chains have softened up a bit, and we're most likely going to see prices in vehicles start to contract. And in fact, if we take a look at the CPI report, we see that new vehicles remain the same. However, used cars and trucks actually decreased. But along with that, and more importantly, we saw that housing and shelter also increased at a slower pace. And so this is actually very good and positive, and something that honestly took me out by surprise is the fact that airline fares also decreased by a significant amount. And so with that said, I want to go ahead and cover what we saw for Tesla stock today, but more importantly, what we need to pay attention to going forward for Tesla stock as well. However, before we go ahead and talk about Tesla, I want to highlight this trade that I mentioned in yesterday's video from Microsoft, where I said that we were most likely going to see Microsoft rally up, and indeed this was a great trade. Now, typically I don't share my trade ideas on YouTube, and I exclusively just publish them for the Push and Profit private group every single day. I talk about the reasons why I'm looking to go into those trades, along with what's going on in the overall market. So if you definitely want access to those trade ideas and the daily briefings, make sure to check out the first link in the description of this video. But now, with that said, I want to go ahead and talk about what we saw with Tesla going on today. So we saw that after the CPI report came out, a massive spike up for Tesla. However, pretty much the entire day we ended up trending downwards. Now, realistically, even though Tesla pretty much traded downwards for the whole day, we still closed up higher than what the close was previously from yesterday. Now, I want to go ahead and break down my two most probable reasons why, in my opinion, I believe Tesla stock pretty much closed downwards today, starting with something very simple, which could simply just be profit taking. I mean, if Tesla rallied up pretty much in the pre-market very high, and a lot of individuals in the past couple of days paid a much higher price for Tesla, it's very apparent that most individuals are going to want to lock in profits if they are doing a short-term trade. But more importantly, we saw news of Elon Musk launching a new company, which is XAI. Now, honestly, this news isn't really too new, because back in April, we heard talks from Elon Musk about opening and starting a company that would rival OpenAI, and he possibly thought of naming it Truth GPT. Now, when that news came out back in April 18th, we clearly saw that Tesla ended up closing red for that day. Now, the reason why we typically see Tesla stock fall down every time Elon Musk starts a new business or a project is simply because of two reasons. Now, I personally don't subscribe to these ideas. However, I could understand the concerns 100%. So the first concern is, hey, if Elon Musk is going to be focusing on these side businesses or these side projects, right, like SpaceX, Twitter, Neuralink, and then now a new AI company that's going to be competing with OpenAI, well, the idea or the thought behind this is that, hey, his focus on Tesla is going to have to diminish, and this means that operations in Tesla are not going to be strategically looked over, which I don't necessarily subscribe to, simply because we've seen Elon Musk manage other companies and still do right by Tesla. Now, the second idea, which also is another concern that I could see, but I necessarily don't subscribe to, is the idea that if Elon Musk starts a new company, the idea is, what if he has to fund that new company by selling a bunch of shares of Tesla? Now, we've seen this happen with the acquisition of Twitter, where Elon Musk offloaded a bunch of shares of Tesla in order to acquire Twitter. And so the idea is, hey, does he have to use Tesla as a piggy bank to go ahead and fund this new idea? And it's definitely a valid concern. However, we've heard multiple times from Elon Musk himself that this is not something that he intentionally tries to do, although it may happen under certain circumstances. But with that being said, I want to go ahead and log into my laptop and take a look at Tesla and talk about what are some other data points that we absolutely want to pay attention to going forward, because of course there's going to be a lot more data in the next coming days that is going to influence the price of Tesla, just like we saw today with the CPI report. Alrighty, so we are officially in my laptop and we're taking a look at Tesla from a 4-hour time frame. Now, as I mentioned earlier, we obviously saw this big spike from Tesla after the good news from the CPI report. However, we did see price action pretty much dwindle down for the entirety of the day. Now, as I mentioned earlier, day over day, it's still positive, although it doesn't look like it because Tesla sold off a majority of the day, it's still higher than what we closed yesterday. However, I want to address some notable events and dates that we want to pay attention to going forward, as they're going to serve as catalyst events for Tesla and the overall market. Just like how we saw Tesla react to the CPI report today, there's a few other reports and data that is coming out in the next couple of days that we absolutely want to, just take a look at, right? So let's go ahead and talk about it, right? So real quick, obviously we had the CPI today. We had a few Federal Reserve speakers talk. We also had the Fed Beige Book, which was just a bunch of data from all the Federal Reserve banks. However, I'm not going to go ahead and address the data from this report, simply because it wasn't anything new. It wasn't anything surprising. And so it had a minuscule impact on the overall market. But what comes out tomorrow, right? Well, it's the Producer Price Index. It's the PPI, right? Now, this is something that is not as popular as the CPI, right? It's not something that, especially when it comes to retail, that a lot of retail investors and traders pay attention to, but it's definitely something significant that we want to watch for. Now, why is that? Well, the PPI, it's very similar to the CPI in the sense that it's a measure on inflation, but it tends to provide an earlier indication of inflation because it measures prices from the producer level before they reach consumers like you and I, right? And so obviously it's kind of like a leading indicator, right? It's like the future CPI report. Knowing what's happening here is important to know, because this lets us know what we're possibly going to see on the next CPI report. Because if producers are paying more for their inputs, then they're going to pass those costs into the onto the consumers, right? And so obviously looking into tomorrow's report, we want to see what ends up happening, because if we see inflation kind of signaling upwards, well, that could lead to the expectations that there's going to have to be two more rate hikes from the Federal Reserve, and that monetary policy is going to have to be tighter. Now, after today's CPI report, it's kind of looking like we either may have no hike or 25 basis points hike. Now, I'm pretty much in the idea that the Federal Reserve is going to hike by 25 basis points in the next meeting. But of course, we still have to pay attention to the data, with the PPI being one of the data points we want to pay attention to. But along with the PPI report, what else do we have, right? Well, we also have the kickoff of earnings, right? So, July 14th, which is Friday, we have earnings from a lot of the banks. Now, I say it's the kickoff of earnings, but it's really not, especially because we already started seeing companies report their earnings as of today. But I say that Friday, July 14th, is going to be the kickoff of earnings, because typically the beginning of earnings season starts with the financial institutions and the big banks. And so we have JP Morgan, we have Wells Fargo, Citigroup, BlackRock, and then of course over the weekend there's not going to be anything. But if we take a look at July 19th, we see a few financial institutions reporting. July 18th, a few more like Bank of America, etc., Morgan Stanley, and so you get the point. And so the reason why this is going to be a very notable date that we also want to pay attention to when we start hearing the earnings from the big banks is because it tells us a lot of information, right? So the big banks is kind of like a thermometer of the economy's health, right? Because if banks are doing well, then it suggests that businesses and individuals are taking loans and they're making deposits, indicating, economic activity and growth, which is, something we want to pay attention to. But more importantly, we want to listen to the quality of credit, right? So on bank earnings, right, you're going to hear, if you ever listen to bank earnings, see, I used to work for Wells Fargo, so I used to always listen to the Wells Fargo bank earnings. But if you ever listen to the earnings, one of the things that they discuss is loan defaults, right? And so if there's an increase of bad loans, well, that might suggest that businesses and consumers are struggling, right? And so that's something we want to know. Like, are individuals and businesses struggling to pay off these loans, right? Because that's going to give us a little bit of an indication of whether the Federal Reserve is going to have to hike again or pause, right? Now, going into the recent hikes, right, and the history of the hikes, one of the things I've said, to the Push and Profit private group, but I've also said publicly on YouTube, is that, it takes time for these rate hikes to actually be felt into the market. It's not like, the Federal Reserve hikes up and then immediately everything changes, right? It takes some time, right? And so far, one of the things I've highlighted is that we've only really felt 30% of the rate hikes going forward, right? If it takes a year to feel it, right? So we've only really felt the 25 basis points, the 50 basis points, and the 75 basis points. We really haven't felt all of these extra hikes that has recently, or that happened last year. We haven't felt this in the economy yet, right? And so one of the things I've said is that, hey, if we already have seen the calamity of, a few regional banks failing due to just only feeling 30% of the rate hikes done by the Federal Reserve, well, what happens when we start actually feeling all of the rate hikes that have previously been done, right? And so that's why, a lot of economists are, kind of believing that, hey, going into the second half of 2023 and kind of into 2024, that's when we're really going to start feeling the signs of a recession. That's why we're seeing, inflation cool off, because obviously now we're starting to see people not spending more, right? Because what's the whole concept of inflation? The prices people are paying, and what it's just, we're seeing the demand in the economy slowly stifle, which is kind of what the Federal Reserve wants to do to slow down inflation and stabilize price stability and also maximize employment. But we may get to a point where things may be real bad, right? So that's why, when we're looking at Tesla in the short term, I think these data points are going to be important, especially like the PPI and the bank earnings, because we want to know, hey, if inflation's cooling off, that's going to be bullish in the short term, and that's very good for Tesla. But what else does Tesla or any other company really trades off of? Well, it trades off the fundamentals, right? The actual revenue that the business is bringing in. Because obviously, there's a reason investors pay a multiple for the stock that they're buying, right? It's because they want to get a return on their investment. And so another notable date that I honestly forgot to bring up is the earnings for Tesla, which is going to be July 19th, right? I think if we scroll down, it's going to be right here, July 19th. So we want to pay attention to the earnings for Tesla as well, because if Tesla does well on their earnings and they beat Wall Street's expectations, well, then that's going to be good, and we could continue seeing Tesla continue to trend up, even despite as we may be heading into a recession. And one of the arguments that a lot of bears have made recently is that, hey, although Tesla spiked up because of the positive delivery numbers, the only reason Tesla was able to deliver those vehicles was because they had to cut their prices. Now, I think that's not too much of a bad idea that Tesla had to cut their prices in order to make as many deliveries, because at the end of the day, that's a ability that Tesla has that a lot of the other automakers, especially these legacy automakers entering in the EV space, they simply don't have. Tesla has the ability and the infrastructure to cut the profit margins for their business while still staying profitable. A lot of these other legacy companies, they can't do that, right? And so I think that was a good move for Tesla, although, we'll go ahead and have to see how that really impacted on their earnings. So that's another notable event. So, just a recap, right? If we have a good PPI report, we have a good bank earning, and of course we have good earnings for Tesla, well, things could look pretty good. And, things will look very good for the market. And, long-term speaking, even if things are bad for Tesla, I am still very bullish on Tesla in the long term, right? I'm optimistic, and if Tesla starts coming down because there's bad earnings and Tesla's earnings are bad and everything else, well, that's fine. It gives me as an opportunity as a long-term investor to buy more shares after there's a dip and a confirmation of an uptrend, right? You probably heard that Warren Buffett quote where you want to be fearful when everyone's greedy and greedy when everyone's fearful. As Tesla stock was rallying up, there wasn't too many opportunities to buy. But as Tesla stock starts coming down, well, if there's bad earnings and etc., well, that's just an opportunity to buy in for the long term. And this is why, I try to, make it very clear that when I talk about Tesla, I always try to cover it from two different perspectives. One from the perspective of a long-term investor, but also from the perspective of a short-term trader, because I have two separate trading accounts. One account where I just trade the short-term fluctuations in price in the short-term trading account. For example, trading Microsoft today, that was just a day trade, right? But I also have a long-term portfolio where I am not actively making trades every single day on it. In fact, I probably do like one purchase a month, right? And so, I just try to make that clear because I don't want individuals to get trading and investing mixed up. They're two completely different vehicles, and you're going to want to approach the markets differently with each different, investing strategy. When it comes to long-term and short-term, it's completely different. And so in the short term, if things are looking bullish, well, hey, I'll go long on my short-term trading account. I'll probably buy some calls for Tesla, or I'll trade with some shares. But that's pretty much it. In my long term, though, you know, if things are bullish, cool, I won't add more. But once things start to come down, if they do, well, that's the opportunity. But with that being said, you know, I don't want to make this video any much more longer than it already has been. So with that being said, guys, make sure to check out this next video right over here, and I'll see you guys on that next video. Take care.